Hello guys, welcome back. So there is this trade we were looking at, which is USDCHF. So let me show you how it went. So entry would have been somewhere here, 5 pip stop loss. So then I'm going to show you where we were looking to take the entry from. So obviously we target 1 to 4 based on the checklist. We target 1 to 4 based on the checklist, but you can always target at least a 1 to 6, 1 to 4 is the sweet spot. You can target 1 to 5. So this is how the trade looked like. So this should have been take profit by what time? Before midnight, I guess. Yeah, before midnight. No, not really. So it went, so it was just on midnight, then take profit was hit. Now the trade has already moved to at least a 1 to 6. I think the trade has gone for a more than a 1 to 6 if you took it at 5 pip stop loss. And then today is still pulling back, but the ideal take profit for this trade is a 1 to 10 risk to reward. So let me see if it went that way successfully. Yeah, so you can see the trade moved nicely from that point henceforth. So this was the trade, very beautiful trade. I'm going to show you using the checklist how we come about such beautiful trades. So this was the trade. This is, like you can see, it's more than a 1 to 6 with a very reasonable stop loss and knowing where to enter. Now this is the trade I'm talking about. So this is it. Yesterday we were looking to take entry here, but we don't just take entry when the market taps here. We have to wait for at least 2 candles or 5 minutes to close in our direction. Now if you check, as you can see, at least 2 candles to close in our direction. You can see that this was the first close. When it tapped here, you don't just take entries on tap, because nobody says that there are orders here. We only take trades when the market has started to move in our direction. So that is why I recommend that whenever you mark somewhere, like I said, sell here, it was so big, and that is why we had to refine. At the same time, when the market tapped here, we were looking for 2 candles to close in our direction, and as you can see, there was no 2 candles closing in our direction at the same time to show that the momentum has kicked in, and that is why there was no entry here. And then when there was entry here, it left a very big imbalance, and therefore we could not take entries. So we had to wait for it to pull back to fill this imbalance first. So when it pulled back, it was at this particular point. Now then this was 1 candle close, and then a liquidation, and then first candle close, second candle close, and then now you enter at the retest with a very tight stop loss. You can even have it as low as this would have been as low as 3.5. It's still okay, but you risk being liquidated first. Ideal one would be at least a 1 to 4, then you secure yourself your nice 1 to 7 so far, but these should have been a 1 to 5, which is pretty much okay for an SMC trader. You don't need that much. So this is the trade. Let me break down using the checklist we normally use, and then I explain how we came up with this trade. Now this, let me clear everything and then start from the daily time frame, because the checklist demands that we start from the daily time frame. So this is the day we are looking for trade, so marked. Now this is the checklist. The checklist is the same for the videos you've been watching, nearly the last like about 10 something videos. The checklist is the same because I summarized the entire thing. So if you want to swing, you swing it. If you don't want to swing, you can just take 1 to 4, because that is what the strategy recommend here. You can pause the video and read through this if you are new here, or if you're not new here, and then this checklist is there, you can take it and then try and implement it on your own. So this day, we can see that previous day closed in relation to the overall market trend. A trend starts when you see 2 candles close in one direction. Now you can see 1, 2, 3, and then the previous day was equally selling. So we look for sales on this day, which is on 20th, which is yesterday. I'm recording this video on 21st. So then we go to 4 hours. That is what the checklist demands, that the daily should be selling at least thrice, or most importantly is that you must do what the previous day did, and you can check the previous day sold, so we could only look for sales. Now we look for alignment. What does alignment means? Alignment means that at least the daily the candle forming on the trading day must have taken the low of the previous candle. Now if you check, this is the candle that opened the day, and immediately it took the low of this candle. But this was when we are asleep. If you are watching it from maybe Africa, we are asleep at this particular point, so we wait until London open. So London opened at this particular candle, and then we go to 1 hour. So London opened when the market was already pulling back, so there's nothing we could do. And then at the same time, the market has not even formed any 2 candles of 1 hour according to the third. According to this is this particular entry point. Wait for 2 1 hour candles to close in your desired direction. The 2 must leave fair value gap in 15 minutes or 5 minutes. If not, then their highs or low should be liquidated. In this case, their high should be liquidated. Now discretionary, you can see that the market is trying to grab some of this. This is the unreacted fair value gap, unmitigated fair value gap. This is already mitigated. This fair value gap is already mitigated, so this order block is equally useless. You need to know the difference between a mitigated and unmitigated order block and fair value gap. Now if we have a mitigated fair value gap, that order block is useless. Just know like that. Like as you can see, actually this fair value gap had already been mitigated, so we don't know where the market would stop reacting. Maybe if we check on a lower time frame, as you can see, this fair value gap here had already been mitigated by this candle, and therefore this order block here was equally useless. So what we do is that we don't know at what point will the market choose to react from, maybe from a 1 minute or 2 minutes order block somewhere there. So that is not our business. We just wait for 2 candles to close in our direction. Now when you see this, London opened here and just kept moving up because the momentum was still bullish. Now when you see these 2 candles forming, it is showing us that this pullback here, this liquidity hunt is done, and this manipulation is done, and therefore we are expecting that at some point, maybe tomorrow, that is why I'm saying that the risk to reward should be 1 to 10 on the minimum. This low should be going as it is a weak low. This low should be going. So when the market forms like this, we go to we check on the fair value gaps within 15 and 5 minutes. So I usually start with 5 minutes and check unmitigated order block or unmitigated fair value gap, not order block. You check for unmitigated supply zone or demand zone, or just generally order flow or fair value gap, sorry. So if you check here, this fair value gap is already mitigated, this fair value gap is already mitigated, this one mitigated, everything mitigated except this is unmitigated. So the whole thing, this is just an order flow. If you don't know what is an order flow, check in this channel, you are going to see what is an order flow. So ideally we should be selling from this particular point. I've already made a video on what is an order flow and characteristics of high probability order flow, so just check that on the channel. By the way, you can join the Telegram group, it's free. Then we take trades together. I don't have any paid mentorship, so take advantage of that and learn from it. So when the market taps here, we will wait for 15 minutes to turn to shift bearish, and this should happen within 1 or 2 hours. I prefer to say it 1-2 hours. So let's see, the market comes back. Let's see, it takes a lot of time to come, so that means that when it comes there, it is now making it low probability. So we need that fair value gap. This fair value gap here should be tapped, not order block. Order block a reactionary point later on, but order flow, but fair value gap is the reaction we need. So when the market taps there, we find it that this is the first candle that forms on our direction. This is this checklist, this section. So we go to the next candle and now start monitoring 2 candles to close. Oh, this is 5 minutes. We need to go to 15 minutes. Yeah, so upon tapping 15 minutes, you can see that upon tapping the fair value gap, we wait for 15 minutes to form in our direction. So 15 minutes forms in our direction, and then now The next thing we wait for is 5 minutes to form at least 2 candles to close in our direction. So let's see. So the first one does not close in our direction, as you can see. I'm really trying to prevent people from getting losses by giving so many preventive measures. As you can see, the candle starts by just continue to move upwards. So when you start to move upwards like this, now this is the second candle that I needed. We cannot enter here, and we could only, I was positioning to enter here if the market had pulled back. If the market had pulled back, I was already looking to take an entry, but as you can see, the market did not pull back. It instead went and went and went. So when I saw that, we again mark it, and since it's a reactionary point, we expect this place to take the entry, and that is why I placed this like this, that now this is where the entry should be taking place. So with that, now you wait for reaction to come here. You wait for the same these two candles to give you direction, and you can see it took a little bit of time, and then it came there, raided everything. So somebody may argue that there was no liquidity, but as you can see, there was a sweep here and then a break of structure down. So we don't bother all those because we know that we will not take trade immediately taps. You shift to 5 minutes all the time, and then you see, now you can see that one is doesn't form 2 candles again, doesn't form 2 candles in our direction, still liquidating the first one, the second one. Now at this particular point, you can look to enter at any reasonable pullback, or you can even enter immediately. You can look to enter immediately. Now stop loss be there, and then now you take trade. Or personally, I prefer to always wait for a small pullback before I take my entries, and that after seeing that, now I would just enter immediately, and that was a take profit taken there. So you can see that was a take profit. Alternatively, somebody can still look for more confirmation. That is why this strategy is very flexible. You can still look for more confirmation. You wait for candle after forming this, the same thing we did here. After this candle formed bearish, we wait for the next candle to form 2 candles in our direction. This is the first one, this is the second one, and you get your entry here, the third one here, stop loss above here, and then you take your entry like that. And as you can see, 1 to 4 was equally reached.